Jeff Greene, the real estate investor and philanthropist. But before we get to Jeff, we want you to be part of the conversation as well. So send us your questions, your comments, your suggestions at cnbc.com/InsideWealthLive. That's cnbc.com/InsideWealthLive if you have any questions for me or Jeff. And now let's get to Jeff. Jeff, thank you, first of all, for spending time with us this morning.
Great to see you, Robert.
So you, of course, became famous first with shorting the housing bubble in 2007, the great financial crisis. You had been in real estate a long time before that. You are, first and foremost, a real estate investor. Tell us what you think broadly, nationally, of the real estate market right now, and where do you think it's headed the rest of the year?
Well, first of all, the short was in 2006. So when I did that, the market was still pretty strong. It had really not shown hardly any signs of slowing down. So, you really have to anticipate trends. I mean, it's sometimes you can't wait till they've happened. But as far as where's real estate now,
so just going back to that for a second. So what did you see in 2006 that few people saw?
Well, you could see I think that Chairman Greenspan called it irrational exuberance. There was just housing prices were going through the roof. People were buying 5, 6, 7 homes on spec. Taxi drivers were talking about the homes they were buying. So you could feel the bubble, but you didn't feel any sense of panic yet. So, so you have to sometimes you see those signs, and that's when you make a move.
And what about now? What do you see broadly?
Well, right now, if you look at housing, we really haven't been building much housing in the last few years because we've been in a kind of a financing crunch as far as for lenders. I was told that some of the major banks in Florida haven't made a construction loan in almost 2 years now. So what we're seeing now is, you're here in our market, and you can see a few things under construction. Those were greenlit and started during the time of extraordinary fiscal and monetary stimulus. So you have this crazy amount of construction, and the overhang lasted a few years longer than normally would have. So, but what you're really seeing is new starts are almost nothing. There's hardly any new starts. So you're really at the point where you're not going to have a lot of excess supply. And so that's the good news. You're not going to have a lot of excess supply to go through.
Good news for people that own properties or investing, not good for buyers, right?
If you're a buyer, there's going to be, it's normally in a cycle like this, you would end the cycle with a glut of inventory you'd be able to pick and choose from.
Right.
You're not going to see that as much, certainly not in this Palm Beach, West Palm Beach market, because basically, most things that were built in this cycle, you had to get, 30 to 40 to 50% pre-sold with big deposits. So there aren't a lot of extra ones being built in the condos or in the apartment buildings.
Yeah, and I want to get to Florida as a whole other topic in West Palm Beach, where at least to me, you are one of, if not the largest landowners in West Palm Beach. But nationally, typically when they raise interest rates, you have prices go down. I mean, that's typically what you would expect to equalize the purchase price of a house. This time around, because so many owners were locked into low rate 30-year fixed, we had no inventory and nobody wanted to move because nobody wanted to get out of their attractive mortgage. So therefore, prices actually went up. What happens now that interest rates are going down and you would expect prices to go up? What do you think happens to inventory? And what do you think happens to prices the rest of this year and next year as we see more interest rate cuts?
Well, if interest rates go down, then for instance, if someone has a loan at 2.5%, the reason they don't want to sell the house is because they don't want to buy a new one and pay 6%.
Right.
If suddenly they can pay 3.5% again, which I don't know if that's going to happen, if they could, then they'd have an incentive to put that old home in the market. So it would increase inventory, more opportunities for buyers to get homes, and that could be a good thing. I think in general, though,
Do prices come down, do you think? Do they go up? Do they keep going up?
Well, I mean, look, the reason prices are so high, in my view, is we have this experimental, crazy, almost nonsensical fiscal and monetary stimulus that we've done since the pandemic. I mean, when AOC talked about modern monetary theory and just, hey, let's just print whatever amount of money we need to give everyone jobs, people thought that's really kooky, but that's exactly what we did. And so that's what's driven a lot of the prices we have today. I mean, a lot of people today that are the money in the economy and the markets this isn't money that we got from having a growing economy. I mean, what's our national debt? $35 trillion now? I mean, that's what's driving all these prices up. So you asked me, did they keep going up? I mean, they've gone up because we added trillions and trillions and trillions and trillions of dollars to our national debt and gave it to Americans to buy things with. So if we stop doing that, that's what's going to, and at some point we're going to have to stop doing that. So I think that's really more going to drive housing prices than traditional supply demand inventory.
But I think on the interest rate side, I think early on I had seen something where you said in 2022 that you felt that the interest rate increases were too much too fast. Do you feel that, were you surprised at how little impact they had on prices, on liquidity?
Yeah, I am surprised because I just think none of us really were able to estimate the amount of overhang from that extraordinary amount of stimulus. I mean, I'll give you an example. Like we're building these two towers in West Palm Beach. So when we started out, you couldn't get any subcontractors. In these drywall subcontractors would go and bid and take 10 jobs. We really should have taken 4 jobs. Well, so because he was getting them, he thought, I'll just rather have more jobs. Well, then what happens? When rates go up and things slow down, he's still so overbooked that he's going to keep those drywallers working for another 2 years. Now, what's happening at this point is when these jobs finish, there aren't any new jobs. So I think you're going to see some real slowdowns in construction. Now, the wild card is the Build Back Better bill that the Biden administration passed, which, some people think could lead to more public sector construction. Maybe it will, maybe it won't. If it doesn't, I think you're going to see a huge slowdown right now in construction jobs. You're already seeing it in mortgage brokers and all those kinds of categories.
Do you feel like we've declared victory on the soft landing? Do you think that we have a landing? And do you think it's soft? And do you think that the odds of a recession next year are low?
Look, I feel that this debt to GDP ratio, which is about 120% now, is unsustainable. And we've done this. We just keep adding debt. I think that it's like somebody has, a little cancer and they get rid of it, and they do it again and get rid of it. But at some point it comes back. And I think the cancer in our economy is this national debt. And American consumers love all this extra money. I mean, and all the debt. I mean, look, we're unique as a country. We're American consumers. They love to buy stuff they don't need with money they don't have, and that's
Right.
what keeps the economy moving. And I think at some point, the consumers may not have the money because their credit cards are topped out, and the federal government may not have the money because at some point, the world markets may rebel and say, you know what? Enough is enough. We're not going to continue to just fund these bonds that have no possibility of being paid back.
Yeah. And
that's the risk.
The election will have a big impact on that as well. I want to come back to Florida because you have made Florida an important part of your real estate portfolio. We had 2 hurricanes in the Southeast recently, neither of which affected West Palm Beach, but reminded us how vulnerable Florida is to these big storms. And there's some discussion headlines about maybe the Florida dream is fading, maybe this mass migration euphoria that was post-pandemic maybe petering out. We see price cuts. Miami now leads the country in terms of median listing price cuts, down 12%. You hear some reports of people cutting their listing prices by 30, 20%. Those might be specific homes in specific areas, but what do you think about the future of Florida right now based on what you're seeing?
Long term, I couldn't be more bullish on Florida. I mean, I lived in LA for 28 years, and I was there for the Northridge earthquake. The next morning, everyone's packing their bags. How can you live here? You don't even know what's going to come. It's not worth it. I don't want to die. 2 weeks later, they're building homes hanging off the cliffs on pilings, And I think it's the same with the hurricanes. I mean, when you're in the middle of it, you're starting to think this is scary stuff. And then when it's over, everyone just is back on their, they have the great high quality of life we have. This is a fantastic place to live. I mean, great climate, great business climate, lots of young entrepreneurs and growing and booming economies. So I think long-term, Florida is going to be a great story. But I think that near-term, we probably will have some issues because, look, if you look at why we had the growth, it wasn't because, even though Ron DeSantis says it's because of the free state of Florida and so forth, the fact of the matter is the feeder cities to Florida are the big northeastern cities, Boston, New York, Philadelphia,
Right.
those cities. You couldn't live in those cities during a contagious pandemic. You can't ride subways and go to high-rise office buildings.
Right.
So back in that period, if you're living in Greenwich, Connecticut, Westchester, or Newton, Massachusetts, living in one of these towns, and all of a sudden, first of all, your suburban house went up in value because people left the urban
Right.
areas. So now all of a sudden, your house that has gone up 30% from the low, and you're thinking to yourself, "Wait a minute, I can go to Florida now," and I'm thinking of moving there anyway in 5 years. So
Right.
let's move now. I'll get a loan at 2.5% on an inexpensive home. I'll sell my house that just went up in value in Greenwich, and I'll work on Zoom, which had just been invented during COVID. And I'll work on Teams and all these remote ways of working, and I'll fly back once a month or whatever. And so everybody who was going to come here between 2020 and 2030 all came at once, and then we had a massive boom, and it was extraordinary. And that's not sustainable because we borrowed so much demand from the future. So many people that were going to come in next year, they came 2 years ago. So you're not going to have that level of growth. It's no question about it. But we will digest whatever overbuilding we have, and long term, it's a great place. And what's happening here too, like even not just this community, but all communities in Florida, is they become real dynamic economies now. It used to be retirees and kind of limited amount of stuff to do. Now, I mean, whatever restaurant you want to go to in Boston or New York, you can find the same restaurant down here. Whatever, sports teams, arts, we have it all. And in addition, you have these beautiful mild winters and wonderful climate and, clean, fresh streets. And so, it's a great place to live.
So you don't see a major correction in Florida real estate? Prices doubled, Palm Beach in some cases tripled from pre-pandemic. You don't see a reversion back? I mean, even if you fell 20, 30, 40%, you'd still be above 2019 levels.
Well, look, housing is a function of interest rates.
And plus, Florida's famous for its booms and busts, right?
Yeah.
So is that period over? Were we not going to have a bust after this boom?
I don't really, because we haven't had the overbuilding, as that we've had in the past. I mean, I know certainly in this market, again, I'm mostly focused on the Palm Beach. West
Miami's probably had some overbuilding.
A little bit over, there's some overbuilding. Look, there's definitely, we built a lot of
Tampa,
apartments.
St. Pete, maybe?
A lot of apartments have been built here. So we're going to, and we own a lot of apartments, and rents are definitely, I'd say they're leveling off. They're not going up for a while now. But, people are still coming here, and apartments stay strong because people can't get houses. So that's now, I think if rates start to come down, then you could have a bigger problem with apartments because people who are in the apartment space think, hey, I'm going to go buy a house now. But I mean, housing prices are largely a function of interest rates. If interest rates start to go down, then the housing price is more affordable. So the price of the houses right now, if rates stay where they are or go higher, then you're right. Housing prices will. I mean, I think they will drop, or they'll
How much?
Well, it depends where rates go. I
Right.
mean, if we have a catastrophe on this, because if you look at the two possible candidates, neither of them are really talking about, not even a single peep about the deficit and the national debt. It's the opposite.
Correct.
They're both just talking about spending more money and cutting more taxes. So if the market looks at this and says, you know what, we are done, we're not going to buy your bonds anymore, and you start seeing interest rates not go down but go up, and you start seeing the 10-year go from the 4 range to the 7 range, if that happened, and it's possible, then you could have a catastrophe for housing. Of course, prices would drop a lot.
If either of these candidates are elected, that it's possible we could see 7% on the 10-year?
Well, I'm just saying, it's almost like, what the analogy I think if somebody has a credit card and they have a $10,000 limit and they're a little tight, then they go to the bank and then they have a $25,000. They go to the bank and now they have a $100,000 limit. And then one day the bank says, hey, Bill, not only can't we increase your limit, we need to pull it back to 50,000 because you've got to pay this back. You don't make enough to cover the interest anymore. And then Bill's in trouble. And I think with the federal government, it's the same thing. We just keep rolling and rolling and rolling. And anybody who's watching this can guess how high can the national debt go? It's 35 trillion. Go to 100 trillion, 200. I mean, at what level does it just look at the point? Is it the point where the interest cost is so high in the national debt that this government can't sustain itself anymore without massive tax increases, which will hurt the economy, or massive spending cuts? And maybe we need that kind of wake up call, because we're not disciplining ourselves as a country on our own.
We're going to get to taxes and we're going to get to the candidates in a minute. But first, we have a question from Cam who says, can you describe what implications lenders may face as condos continue to sit on the market and home values continue to decrease? I'm assuming that may be a Florida question. But do you see risk on the lender side right now with properties? I mean, you've been very good throughout your career, especially in West Palm Beach, of buying properties at attractive values from lenders that were sitting on these properties that had defaulted. Do you see any crisis or at least opportunities from lenders right now, particularly in Florida?
I mean, I have not seen in the way when I've been dealing with this, I haven't seen lenders acting irrationally or acting. I think they've been pretty conservative. And again, if you look at the big banks, the JP Morgans and the Goldman Sachs and Bank of America, I think their loans are generally in pretty good shape. I mean, they haven't. Of course, you're always going. They have reserves for losses. There will be losses. There always are losses, but I don't think that. I've not seen any banks lending 90% loan to value, and you have the huge private credit world, which is really taking up a lot of the slack.
That's true.
And they're out there and they're willing to play ball with people, and they don't have the regulations. So, if you're a private credit lender and you're a mezzanine lender on a condominium building, you can be patient and you can wait through the cycle. And let's face it, real estate is all about making it long term to the next cycle, as long as you have a growing population that needs more real estate.
Yeah, and one of the things that makes you unusual in real estate also is that this project that you're doing now in West Palm Beach, which is called One West Palm, we just showed a picture of it. How big is it? And you are funding that yourself, so you don't have the typical lending structure, the typical partners. I know that's probably a benefit in some ways and a challenge, but tell us about this project and why do you believe in West Palm Beach?
Well, the project's 1.5 million square feet. It's gross, it's net about half that. It's actually one tower is 200 hotel rooms and suites, 200,000 feet of Class A office space, and the other tower is 300,000 feet of luxury residential apartments. So I built it. And again, I am unusual because I don't have any partners, I don't have any investors, and I don't have any debt. I'm just building it out of cash flow, so you don't have the typical pressure. And it does give us the flexibility to kind of make decisions as we go and make it the best project possible.
And I was there. You and I toured it yesterday. I've never seen an entertainment space like that. It's just the scale and the amenities in that are just going to be better than anything I've ever seen in West Palm. But do you think the growth here, especially on the commercial side, on offices, 200,000 square feet of office space, you're going to fill that? How long will that take to fill?
Well, look, what we've all learned from this cycle about office space is that the best office space always gets leased, because
That's true.
You think about who are the decision makers in most offices. Say it's a big law firm. As an example, that's in New York or Boston or here, and say it's 50 or 100 partners. You're picking out your office space. If you get a cheaper office space, you're paying if you're paying 1/100th of that or 200th of that. So basically, they want the best space. And the same with private. And if you're a private equity company coming here, or if you're a hedge fund and you're trying to, you have you want your people to be able to perform. You want the best, most modern space with the best amenities. So the new kid in the town always will do well. So I'm not worried that we won't rent that. We have this is the tallest office tower in Palm Beach County.
Wow.
The views, as you could see, were just standing in every direction from the lowest floor to the highest floor. So I think we'll do just fine with the office space. And the hotel rooms, again, it's a brand new, beautiful hotel. The reason, look, I believe in this market, and I think that what we've seen in this town is the luxury and the lifestyle of Palm Beach has now moved into West Palm Beach, because Palm Beach is, if you look at the population of Palm Beach, I think it was something like 9,000 30 years ago. I think it's 9,300 now.
Right.
There's it's a very anti-development town. There's no new land. Everything's built out. So
Ken Griffin owns half of it now. So
he's bought a bunch of great lots. It turned out they were pretty good prices in the end. He made a good investments. But I think that what you're seeing is that people who want to be in this area have to move into West Palm Beach.
Right.
And so now people are realizing, you know what, I can live in a beautiful tower and I can look out at the ocean and the whole world now, all these amenities. Remember, the bridges into Palm Beach, people who have been to Miami, you drive those causeways. I mean, they can in traffic can take you an hour.
Yeah.
The bridge into Palm Beach it's 60 seconds. It's
Right.
not even, it's less than a mile. It's
Right.
probably a half a mile.
Yeah.
So really being across the bridge, Palm Beach and West Palm Beach is really like one community,
Yeah.
but it has two
Yeah.
separate governments and two separate police forces, but it's really like one. So I think when I built those towers, I felt I'm 2 blocks away from the bridge to Palm Beach, so that I'm really building Palm Beach towers with
I
a
see.
West Palm Beach address.
And on the residential side, based on what you see in the market right now in the residential side, do you think those will be condos for sale or rentals? And how do you think about that decision?
Well, look, I mean, we were originally going to do it as luxury rentals. It was still sort of on the fence about it. We've had a lot of interest from brokers who have come to us and said that this is a very unique product. And with the amount of interest, there's no condominium building anywhere around here that has 3 pools. We have an outdoor pool in the hotel, outdoor pool in the apartment, indoor 25-meter lap pool, 10,000 for gym and spa. We have a jumbotron screen in the pool that's 25 by 25 feet. We have 2 indoor tennis courts. They're the only indoor tennis courts in all of Palm Beach County. So,
and the dog walk.
Oh, dog walk.
And then you've got
500 feet.
The ballrooms. I mean, 2 different ballrooms.
Yeah, and even the elevators, the fastest elevators you can get. I mean, I just did this. We did this to be the number one quality in every way.
Yeah.
So we've been approached by a number of people. The person said this really should be a condominium because buyers will want this level of quality. And on top of that, where we're located, we're right across from what's really now the center of Palm Beach, where all the great restaurants are, and the Breakers, and the Nora District, which is a big area being built just across from us, has all kinds of restaurants. So, but we'll make that decision in the next few months and decide if we want to sell them off.
Have you? I know we have a lot of people in real estate dialing in now. Have you picked a brokerage firm you're going to work with, and how will you decide who's going to sell it?
I mean, there were so many great firms, so we'll, and some of them are our tenants in our building, so we'll have to.
We have one question from Jeffrey, and this last on real estate, but it relates to commercial real estate. The commercial market in the U.S. continues to struggle. What incentives do you think are needed to get people back in the office, and what financial tools could bring people back to those buildings? Do you repurpose them? Do you think back to office is never, quote, going back to where it was before? And as someone who has 200,000 square feet of office space, how do you get people back in the office?
Well, look, I have.
We had Amazon coming out recently and basically saying if you don't like being back in the office, go work for another firm. Do you think companies should do that?
Yes. I mean, I agree with it because, not just because you want to fill up office space. I think that ultimately you want to have a successful economy. So you need people who do well and learn a lot. Well, people don't learn without being around other workers, mentors, people senior to them, people working with people junior to them. And it's collaborating, working together is a very important part of being successful. So I think we need to do that. And I think most companies are doing that. So I don't think that we're going to be, this work from home thing will kind of fade. So look, some things that make sense. If you're selling and you're on the phone and you're going out to see customers, but look, real estate brokers, we have real estate brokerage tenants in our building. You walk in, there's never anyone there. There's just like 30 empty desks.
Right, as it should be. They should be out selling.
Yeah, they're out selling. They come in when they come in, and that's fine. But other fields, you need to be in the office to do your work.
Yeah. So we touched a little bit on the elections. We saw Stan Druckenmiller this week basically tell Bloomberg he thinks that the market has priced in a Trump victory. We saw Dan Loeb at Third Point today saying basically the same thing. Markets are basically betting on a Trump win, maybe not a Trump sweep, maybe a Trump sweep, or a red sweep. Do you think, therefore, if markets are indeed reaching new highs every day, in part because they're betting on a Trump win and perhaps a sweep, do you think if there is a Harris win, that markets will go the other way?
Not necessarily. I mean, I think it's look. I mean, it's really hard to say. I mean, I could not place a bet on this election. It's just too close, and it's down to a minuscule number of voters in 7 states.
Yeah.
You just don't really know what's going to move them even if they're movable at all. I mean, it's hard for me to even think that anyone today wouldn't know what they're doing. Like, I mean, who doesn't know? Donald Trump's been in front of us every day for the last 10 years. I mean, nonstop. We know everything about Donald Trump. In Kamala Harris, we know pretty much what what that administration, what the Democrats will be about. So I don't know how many undecided voters there even are out there, but I think if we have a Harris administration, I don't think necessarily the markets are going to crash, and I don't at all. I think that, and I don't think it's hard to guess at this about elections.
Yeah. Well, remember when Trump was elected in 2016, you had futures down that night, and then the next day the market rallied, and that started that huge bull run. But that was based on the assumption and eventual reality of major tax cuts. We can't, as you pointed out, because of the budget deficit, we can't cut taxes much more without even extending these without adding more to the deficit. Do you think markets rally the day after if Trump wins? Do you think they go down? Do you think interest rates go up?
I think it has to do with what happens with the House and the Senate. I mean,
Okay.
it's because if you have a red sweep, as you call it, and you have the House, Senate, and they all became Republican.
Yeah.
Then I think you will have tremendous growth in the economy. You're going to have rates go down. You're going to have tax cuts everywhere. We're going to have a boom. The consequences are going to be probably a catastrophe because we're going to have our national debt will go to $40 trillion and our debt to GDP ratio will be out of control. I think long-termly good, short-termly bad. If you have what's more likely, which is split government, it looks like people talking about a Democratic House, I think, and a Republican Senate, and who knows who the president is. Then, you'll have the Trump tax cuts will expire, which I have no problem with that. I mean, I think we need more revenue. And I think that the tax, what would the capital gains go from 20 to 28 or something?
That's what she said.
Is that what they cut? And that's where they go back to, which, again, I'd rather pay no capital gains taxes, but we have a country that has a lot of expenses, and these are programs that are not, everyone talks about it, inefficient government. Elon Musk is going to come change. What's he going to do? Is he going to cancel Social Security and Medicare and our national defense expenses? Look at the budget. The budget is there's very little we can really do about the budget.
Right.
So the expense side you can tweak it a little bit. So then you think the only choice is revenue. So I have no problem if we and I think maybe so I don't think the expiring tax cuts will necessarily be terrible. So if we have a split government, I think everything will be the same either way.
And which candidate do you think will be better for real estate in the short term?
Again, I just don't think it's going to matter if you have a split government because basically you're not going to have you're not going to change the tax code anymore at all because Trump's not going to get what he wants if he has a Democratic House, and Harris isn't going to get what she wants if she has a Republican Senate.
Now, in addition to being a real estate investor, you also manage your own portfolio of financial investments. I know you don't do a lot. You're not actively trading all day, every day, like some of your friends in the hedge fund world, but it's something you do. And so if, let's say there's a Trump victory, what does that portfolio investment look like? Does it change from what you have now? Are there things that become more attractive if there's a Trump sweep? And there are things that become more attractive if there's, on the lesser chance, a Harris sweep?
Well, I don't know. There's a lesser chance. I think it's 50-50.
You think it's 50-50?
Yeah, I think it's
of a sweep either way?
Oh, I'm sorry. No, not of a sweep. I think it's very unlikely that a sweep, but I think it's 50-50 that either candidate wins the presidency at this point.
Divided government, I think everyone agrees, you're not going to get dramatic change.
Right.
Unless it's, there are some things like tariffs that Trump could do on his own. But from an investment point of view.
Look, I mean, I'm someone who believes in buying great assets and holding them long term and watching them. I mean, we have, I own Google. I've had it for a long, long time. Meta, Apple, a lot of the tech stocks, JP Morgan, Bank of America. These companies are going to continue to do fine. Look, the world is changing. I mean, who would have thought, if you said 20 years ago that the biggest taxi company in the world has no cars, and that the biggest hospitality and hotel company in the world has no hotel rooms, and the biggest retailer in the world has hardly any inventory. I mean, the world is changing all the time, and the world is going to change with AI. So you have to kind of keep your eye towards the future and think, hey, what's the next change going to be? Because 20 years ago, you wouldn't have thought that there'd be an Airbnb competing with Marriott and Hilton. You wouldn't have thought that Uber would be competing with the local taxi drivers. So you have to really think, where are things going? And that I don't think is necessarily a function of who's president. That's really a function of just understanding trends, trying to keep your eye on the ball and make intelligent and diverse investments.
And when it comes to AI, are you mainly investing in that through Meta, through Google, through Apple and Amazon? Is there any attraction to you of betting on startups or investing in other parts of the market?
No, I just don't do that. At this point, if I were 25 years younger, but like you have to really, that's a specialized space. And
Yeah.
honestly, if I were advising someone on how to get into AI, find out who the best, there's some great companies. I'm not going to name any, but there's some great hedge funds and private equity companies and venture funds that's all they do all day long is look at this stuff and figure it out. So, but just picking one would be a mistake. I mean, you have to realize that when you're in these kinds of new spaces, most companies are going to go out of business. So the best thing you could do, and now the smartest people do, is have lots of different bets down. Some can be bigger than others, and just hope that one of them becomes the next Amazon.
And you talked a little bit before about taxes. Do you think there could ever be a wealth tax in this country, and do you think there should be?
Look, there definitely should not be one. I mean, people sometimes really believe that, poor people are going to get richer by making rich people poorer, and that just doesn't happen. I mean, there's no question about it. I mean, poor people get richer by having opportunity, education, good value systems, good opportunities. But I can tell you that there's that what we've done in this country on inequality is just it's insane. I mean, when you look, I'm living in a great home. I have an amazing life. When I was a kid growing up in Worcester, Massachusetts, the really rich people had a Cadillac or a Lincoln Continental, not a Chevrolet or a Pontiac. They maybe lived on a little street with a little bit of winding road to it, a 2-car garage, a little bigger backyard, but nobody had yachts or jets or mansions. You'd hear about Queen Elizabeth or the Rockefellers or J. Paul Getty, and you think that's like something that you're never going to be part of. That's something that's just a weird anomaly. Now, the people are living, and I'm living very well, but people are living in extraordinarily wealthy lifestyles, and the whole world can see how they're living. And most people are not living. Most people are struggling and living week to week and month to month and day to day, and as they say, paycheck to paycheck. And those people who are living like that see this wealth, and that they're going to be jealous, and they think like they need to pay. We want to get some of their money so we can live better. And if you see what happened in California with that crazy transfer tax in LA that they passed on all real estate, and in Massachusetts, don't they have a big tax there? So you can see that people have an appetite to do that. I think it's going to be very.
That's California and Massachusetts. Those are very liberal states.
A lot of people think California is kind of a forerunner, bellwether future things. I mean, but so do I think there will be? I think it depends what we do as a country. If we, and again, that's probably why people say, do you lean more Democrat than Republican? Because I really believe that, talent is widespread. Talent is like evenly spread around the world, but opportunity is not. And I think that what a government can do is to equalize opportunity. So basically, kids, every kid can have an opportunity to have a good education, healthcare, and housing. So every kid in America can have a chance to live the American dream like I have. And so I think if we address that and we kind of pull people up, which I'm hoping that we can do, and it may mean that people like me have to be as wealthy and pay a few more taxes. I think you're going to be much less likely to have a wealth tax and the kind of anger and jealousy and envy that leads people to go after the rich and want to do this. But I think if you keep doing what we're doing, and we, some of the things Donald Trump is saying is cut corporate tax rates more, and great, I'll get a better jet. I mean, that's great, but ultimately, long term, what kind of country will I leave my kids if you have a bunch of angry, upset people, and you're not helping to bring people up from the bottom? Because you want to bring everybody up. That's the key. To me, that's what we need to do. Is if we do that, if we don't do it, I think we will have a wealth tax.
And we don't see signs of a populist rage against wealth per se. We see certainly rage against major institutions and the elite more broadly. But do you think it's possible, if these policies continue, that we could see a more populist I would say rioting or social unrest, but something against wealth in this country? Because that is what differentiates the U.S. from a lot of other countries, in that we do
Yeah.
tend to, as a whole, admire the wealthy, and everybody's got mixed views about it, but we don't. It doesn't have the same populist view as, let's say, France or other parts of Europe. But do you think that could happen?
Look, the trend is, I mean, billionaire is a big positive thing. And I mean, look, when
Yeah.
I got in the Forbes 500, became a billionaire, all of a sudden, it's almost like you have celebrity status. I mean, anyone who achieves the extraordinary wealth like that I've achieved, there's a lot of luck involved. I mean, you can't. I mean, I have friends I went to Harvard Business School with. They're much smarter than me. They've worked much harder than me. You have a lot of luck to get to that point, and it's been something that it's the way our society has treated wealth. We've admired wealth, we've saluted wealth, and a lot of that is look, a lot of America. The other thing, remember, America's a very philanthropic country. We're in the
Yes.
Giving Pledge,
Yes.
and
Which you signed in 2012,
Yeah.
2010.
yeah, and we love making a difference. I mean, we try to do things, but a lot of billionaires have done. And you look at like someone like Mike Bloomberg. I mean, the amount of money he's given to my alma mater, Johns Hopkins. I mean, and so basically, maybe that's one of the reasons that there isn't the anger
Yeah.
and hate towards the really rich. But I think if you look at historically, go back to the French Revolution. You can look at any time in history, the Roman Empire. At some point,
Yeah.
people who were struggling, get angry at and jealous and upset at the people who are living extraordinarily well. So I'd say that, you have to be mindful of that, mindful of history, and just understand that you have to. It's in your own self-interest as a rich person or a successful person to, even if you're not. I'm compassionate. I care about people. I know where I came from. I want everyone to have those opportunities. It's a thrill to help other people. But even if I didn't feel that way, if I'm just selfish and wanted to just live well, I'd say, you know what? Let's make sure that there's as few people as possible who are struggling in this country.
Well, one way you've helped that directly is through your school. Tell me about the Greene School.
Don't say Jeff Greene. My wife will be
Sorry,
upset.
the Greene School of Living, which I got to see this morning with a lot of the parents there, and I got to see yesterday. And what has that achieved, and in a very short time?
Well, it's our 9th year. We're now pre-K to 11. We're adding a grade a year, so next year we're out the 12th grade. So we're pre-K all the way through high school. It's been very fulfilling. We have a great program. I mean, look,
I met parents there this morning that had literally thought about where to live up and down the East Coast, starting in Boston, going all the way to Florida. And they say they picked West Palm because of your school, because you have been so generous with your funding that you brought in the best math teachers, the best music teachers, the best drama teachers, the best head of school. These are people that you just said, look, what will it take to get you to come here? And in a very short time, you've created, because education is so important for these young families and where to live, that it has become a prominent institution within Florida in a short amount of time.
Yeah, well, look. This is thanks to our amazing head of school and our great teachers, and my wife, who's worked tirelessly on this. I mean, this is, and our families. I mean, it's a team effort, and look. I want you to know, this isn't just for rich people. Over 40% of the kids get financial aid, and basically we're need blind. So you do have to get in. It's for kids who have high potential, but it's. You pay what you can afford. If the computer says you can only pay a few thousand a year, that's all you pay, and we cover the difference. And it's been very fulfilling. But we have, we have 2 teachers per class in all the lower grades, no more than 18 kids. All the teachers have master's degrees. Look, in this country, I mean, we need to work on our education because we all know, 14% of all Americans, can't read past the 4th grade reading level. I mean, that's a scary statistic when you think of that, because not only can they not get through life, but we all know that prior to 3rd grade you learn to read. After 3rd grade you read to learn. So if you're not reading, you're not learning, and your life's in trouble. So we're using this school as it's a model. It's a few hundred kids, but we really want. My dream is that every child in America can have the same kind of education that the kids at the Greene School are getting, because there's no reason as a country we shouldn't be doing that. We have to figure it out. We can't just blame it on the teachers unions and throw in the towel. I mean, look at the best states in the country, the best public education, Massachusetts, Connecticut, New Hampshire, all these new states.
Yeah,
They have
big
strong
teachers
teachers
unions,
unions. You know, you just have to, but we have to continue to fight for it. It's been a tremendous challenge and difficult for some of the smartest people, as we've talked about in this country, whether it's the Gates Foundation or Bloomberg when he was mayor. But we can't give up on the kids because that's the future of this country.
And I want to end on perhaps the most important topic for anyone at your success level, which is your kids and how you raise kids in this environment, which is very different from the environment that you grew up in, but still have those same values and still be able to navigate all the things that the world is going to throw at them over time. So how have you approached and Maisie approached raising your kids in a way that at least gives them some of the values that you had growing up as a struggling kid of a blue collar family in Worcester, Mass?
Well, first of all, my wife is Chinese, so she's strong and aggressive, and you know she makes
And
sure
brilliant.
and brilliant, and she makes sure that they get the best education, that they stay focused. I mean, look, I think that you have to, no matter where you are in life, whether you're rich, poor, whatever, old, young, you have to know where you are and what your circumstances are. Our circumstances are, our kids are growing up in a bubble. They're growing up in a very wealthy community.
They fly private.
Fly privately. They live in multiple homes. They go to a school called the Green School. The name is Green. I mean,
Right.
but I reckon we have to recognize that. You can't just say, well, they're there. You have to recognize this is a challenge. That you have to make sure that these kids understand that they're not going there to take advantage. They're going there to be a representative of our family, and to make sure that the values that we believe in, that they follow those values. And so, look, with kids, we all know with kids, a lot of it is just sort of you do the best you can, but a lot of it is.
But you and Maisie, and especially you are so involved. You bring them to school every morning.
Yes, I do.
In your Tesla. You don't have a driver. You don't have
No.
security. I mean, you pick them up from their different lessons.
Yeah.
You have dinner with them every night. So has that? I mean, not everyone in your position does that. They have staff who do that. Was that a conscious choice? And how will you continue to be sort of that involved?
Well, that's something that my wife and I, we realized you can live a rich, fancy lifestyle, but you can still have a down to earth existence, and that's what we do. So we really, we spend a lot of time with our kids. Look, like most, we're not unique in that. Most parents want to be around their kids.
I think you're unique at your level.
Well, plus I'm an older dad, so I mean, it's I'm not out trying to conquer the world as much. Maybe if I was 30 years younger, I'd be out. I'd want to be at the office all night, not picking up my kids from school. At this point, that's my priority, and I love my children and my wife very much, and we want to make sure that the kids not just have advantages, but that they have great values, and that they can achieve what I've achieved, which is really, a sense of fulfillment and accomplishment, and feeling that they've done things on their own, and that they have this tools and the skill set to really thrive in their lives. And then that's all any parents can do for their kids.
Yeah. And then in terms of what you will leave them, I mean, that's always the big question, what and when. And so broadly speaking, what kind of life would you like them to have? I mean, would you like them to work? Do they know they'll have to work? I mean, how do you think about what kind of world they think they're going to grow up in, and what you would like to leave them?
Well, we've thought about this a lot, and that's one thing. Being in the Giving Pledge, you get a chance to be with other people who are in the similar circumstances, and talk about these issues. So, everyone has a different approach. I mean, but if our kids want to live in a house like this, they're going to have to figure that out on their own. They're not going to be homeless. We'll make sure they have a house. I mean, they know that. We'll make sure that they get a great education. But if they want to fly around in a private jet, they're going to have to figure that out on their own. And so basically, and I think that most people in our situation feel the same way. I mean, they feel like, we want our kids, because ultimately, as it turns out, it's interesting. I look at myself and I think, well, what am I most proud of? I'm most proud of the fact that I started with nothing, and that my dad lost his livelihood when I was in high school. I had to work my way through Johns Hopkins, 3 jobs. And I'm so proud of that. And I always think, well, my kids can never have the thing I'm most proud of. Because whatever they do, people will always say, But you know, you look at the upbringing you had. Not even if they're not spoiled. Well, but look at the great school you went to. Look at the great all the lessons you got. And so I'm cognizant. I think every parent at every economic level has to think, okay, you know, where am I? Where are my kids? And what values I want them to have? But I think that knowing that, we want to make sure that I want them to just be happy, fulfilled, and live meaningful lives.
Great. Well, they all seem like great kids. So, Jeff, thank you so much for joining us
It's always a
today.
pleasure.
And to all of you, thank you for joining us as well. If you like this conversation, or if you have not signed up for our Inside Wealth newsletter, you should do that right now by going to cnbc.com/insidewealth. That's